Okay, gold is being pressured from the highs of last week, came up in a decent move that tested the 78.6, a resistance area, and one would expect, given the dovish rhetoric at the Fed, that this would hold as resistance and the downside is left looking vulnerable. This is the daily chart. So, on that daily chart, if we draw a trend line, we're looking for a deceleration of this move and confirmation that we're breaking structure to the downside for a move lower. If we go to the 4-hour chart, we can start looking for structural points. And what I'm looking for is the high and then the highest low adjacent to it, which is over here, which pretty much coincides with Thursday's low. So we may as well just mark Thursday's low as a key level and draw an area of support in and around Wednesday's and Thursday's low. Okay, so technically we are on a longer term frame, not quite convinced that the bullish trend is over. So we're still in a bullish trend overall. We had some wicks that broke the lows, but we haven't had a candle close below those lows. So a little bit hesitant to want to jump on the thesis or stick to or be 100%, or we can never be 100% in markets, but be convinced that the bullish trend is over on a longer term time frame. But on a lower time frame, such as the 1 hour, you'll see here that we did in fact close below on the 1 hour. So I'll be happy looking for shorts in line with that break. And I'll be looking for, at the moment, the closing price, which is this blue dotted line, to act as to sort of hamstring this rally. So we've got a lower low made in London, a subsequent pump up to the closing price, and this consolidation area from Asia. This market is a resistance. So looking for the market at the moment to roll over in line with this W formation, back into the neckline at least, seeing how the price behaves here, and then taking out these lows again from Thursday for a downside continuation. So we'll have to see. At the moment, what's interesting is this closing price is broken and we're rallying towards the highs of the day. And this is all happening at a rather obscure time of day. I mean, the treasury market isn't even open yet. So, no idea what's causing this rally. Would have to look around, but this is certainly interesting. So we've pumped up through that closing price. We're printing now a fresh high for the day. So let's mark that. Excuse me. So really we want to get back below this closing price. So I'll be looking now. So thesis is that we've pumped up to the highs of the day. There's a possibility that we'll come back to the closing price in line with this W formation, which could hamstring the rally back to the closing price and see if we can't build bearish structure around there for a continuation to the downside in line with the London breakout.